Now is Jonathan Sakraida, equity research analyst at CFRA. Jonathan, thanks so much for joining the show.
Hey, Caroline, good to be here.
All right, so we've had a lot of winners today, Jonathan, but we haven't talked about Vertiv Holdings yet, and it was a huge winner. Shares were up about 15% today. They're up about 30% this month, 193% year to date, even more than that, 216% over the past 1 year. So obviously a standout performer here. Just had an investor day. We've seen a flurry of analyst activity following that, including from you, raising your price target to 150. Tell us where all the optimism comes from that investor day.
Right, so really it's the growth story here for Vertiv. Looking at preliminary guidance for 2025, organic revenue growth was much better than consensus at 16 to 18% guided for next year, and also earnings per share of 350 to 360 above a consensus of 340 for next year. Also, really the longer term growth trajectory being kind of ironed out a bit and having a bit more visibility for investors. So looking out to 2029, they're now seeing operating margins of around 25%. Prior, the long-term target was 20%. So obviously some very strong ramping of profitability for the company and additional visibility into this trajectory. So really both sales and earnings growth, and really what's being indicated is not at a cost to the balance sheet. They're expecting to achieve this growth while maintaining relatively low leverage between 1 and 2 times net debt to EBITDA, and also while still ramping margins. So you're achieving very strong leading organic growth within the company without sacrificing the fundamentals as far as profitability.
Okay, should note that every analyst on Wall Street, according to LSEG, has a buy rating on shares, although the median price target is 140.50, and it ended up closing today at 140.94. So it sounds like maybe there'll need to be some catch-up played in the coming days. But I guess the big question here is how much of this has to do with AI, and at what point, can it no longer run?
Right, so this is an AI story, right? So none of this AI revolution is going to happen without physical infrastructure. And this is where a company like Vertiv comes into play. It's projected about 80% of their sales are going to be coming from the data center market, a lot of that coming from co-location and hyperscale. So this is absolutely a growth story tied to AI. And I think a good proxy for investors to look at the spending from tech giants, capital spending. Third quarter, if you look at Meta, Google, Amazon, as well as Microsoft, combined about CapEx of around $60 billion. This is up from just over $50 billion in the second quarter. And a lot of that is being driven for spending on data centers. If you look downstream at beneficiaries, Vertiv, in our opinion, is near the front of the line. They're providing the power management systems, the thermal cooling systems. And what we really like about Vertiv is that they're doing a great job of keeping the ear to the ground, working and collaborating with their customer base very closely to understand what are their needs, what do they need as far as different systems to address their issues. Also collaborating with peers like NVIDIA, like Intel, developing innovative solutions for this very dynamic market.
So you said Vertiv is near the front of the line. Are there any other names that are with it at the front of the line that you have strong buys on, even despite impressive runs higher?
I'd say NVIDIA, of course, is a popular beneficiary of this AI revolution that we hear quite often about. But Vertiv is really coming more into the zeitgeist here in the investment community. We've been really pounding the table since February as Vertiv with the strong buy. It's really come up a lot, which, if the returns you mentioned can give investors pause. But really, that's just how strong the fundamentals have been, right? We're expecting around 40% EPS expansion this year, over 30% next year. So this is really achieving a pretty incredible momentum on its growth flywheel. And once again, we see CapEx for data centers only to go higher. They've done a very good job, like we said, of partnerships and providing innovative solutions here as far as their end-to-end solutions for thermal management and power management. So we know don't expect the same returns next year, right? It's probably not going to see another 200% return, but we do think there's still some upside. As you mentioned, $150 price target. We're thinking maybe some of our peers were a little conservative, might have to update those again soon, but really a very strong name, one of the strongest growers we've seen in the industrial sector.
All right, with a strong buy, I'm just taking a look. The highest price target on the street is 155. So with the strong buy, it sounds like you might need to be updating this price target again soon. So we'll have to check back in with you. Jonathan Sakraida, equity research analyst at CFRA. Thank you so much.